Warren talks about investing. And when he does invest, he doesn't invest in stocks, he invests in companies. And his whole intention is to own a piece of that company because he believes for what that company stands for. I personally do not invest in crypto. I have nothing against crypto. I don't understand and I'm not comfortable with that type of currency. So I don't invest in it. Can you make money? Absolutely. Can you lose money? Absolutely. Is there a plan? It's doing your homework and not going into anything blind. And that goes back to owning and understanding your business and industry.
Welcome to the Franchise Freedom Podcast, where you can escape the corporate trap through franchise ownership. Here's your host, Giuseppe Grammatico, the Franchise Guide.
Welcome to the Franchise Freedom Podcast. I'm your host, Giuseppe Grammatico, your franchise guide. I'm going to mix things up today. We've been doing a lot of conversations around franchise ownership. We've had various franchisors, franchise companies on here, funding and franchise attorneys, and wanted to mix things up a little bit because a lot of things flow all together. And the reason I bring that up is just had the opportunity this weekend to listen to the Berkshire Hathaway annual meeting. And for those that haven't listened to that meeting, I believe the entire 2 hours of Warren's speaking is up on YouTube, and you can listen. There's a 6 hour plus recording. So there's some commentary before and after, but Warren is someone I've been following since I was in college, going into the late 90s, and someone that his principles really aren't just about investing in the stock market, but investing in businesses, investing in yourself. Wanted to really discuss because he's been a role model to me. I follow his ways of investing and really had an impact on me over the years. Again, if you haven't listened to it, check it out. I'm going to see if I can include the YouTube link here. And yeah, just a great listen. So he will be stepping down and replacing himself in the business as he approaches the age of 94, 95. So just a quick little bio on who Warren Edward Buffett, billionaire investor, philanthropist, served as CEO and chairman of Berkshire Hathaway, is known as the Oracle of Omaha, and is considered one of the most successful investors in the 20th century. In 1965, Buffett gained majority control of Berkshire Hathaway, a textile manufacturer, and turned it into his primary investment vehicle. Why do we talk about Warren? The reason we do is, number one, he has consistently beat the stock market and has a different approach. The overall stock market, we refer to that as the S&P 500. And he's got some investment principles that I think remain true regardless of whatever industry, if you own businesses or own stock bonds, real estate, it all applies. And the reason we talk about this quite a bit, and we're going to get some future guests on the show, is that everything flows together. So for myself, for example, the income I make from my franchise consulting and coaching business, I reinvest back into my business. I reinvest into real estate. I reinvest into the stock market. The money is flowing. There's definitely some additional income streams. Warren talks, what we're going to get into his 5 rules, but his rule number 1 and 2, which are pretty funny here, are number 1, never lose money. And rule number 2 is remember rule number 1. But yeah, I wanted to just list his 5 rules, and then we're gonna dive deep into a few of them here. So Warren's 5 rules, we call it Buffett's wisdom for potentially building wealth, include investing for the long term, staying informed, maintaining a competitive advantage, focusing on quality, and managing risk. So those are some of the principles. There's plenty more, but for this episode, for this show, we're going to talk about the 5. So investing for the long term, I find this one very interesting because in order to invest in the long term, you need to have a vision. When you're looking at an investment, whether that be a stock you're looking to invest in the stock market, or even your own franchise or non-franchise business, before getting into that, you need to have a vision. Where do you want to be? What are you looking? Are you looking to own the business for 5 years and flip for a profit? Are you looking to own for the next 20 years, retire, and create a legacy for your family? Having that long-term vision is crucial. It'll help you put everything on track, place everything out so you have annual goals. So if it means starting at one location and adding a location every year, ending with 10 in the course of 10 years, you write that out. That way you have something to work off of. I personally use Google Docs and a Google Sheet so that I can share with my mentors. If you have a coach, you can share with your coach, anyone on your team, your investors and partners, and your spouse, whoever's involved in the process. But having that long-term vision, I think, is crucial. Warren talks about investing, and when he does invest, he doesn't invest in stocks; he invests in companies. And his whole intention is to own a piece of that company because he believes for what that company stands for. He believes the company is undervalued. He could potentially add value and or see value down the road. So this is not something about buying a stock and trading it. He's talking about actually owning a piece of the business, having that mindset and shift, that as opposed to just trading stock and just dealing with numbers on paper or tickers on paper. You're actually owning a piece of the company. So the intention is to own for the long term. So that is number one. Number two, staying informed. Staying informed, that means a lot of things. You knowing on what's going on in the industry. Has your industry changed? Staying informed goes into, I look at it on the side of business ownership, is learning about AI. What are some of the advantages of using technology? What are some changes that the industry is experiencing? And again, this applies to business ownership as well as if you're owning stock, or as Warren says, owning publicly traded companies. But staying informed as to the changes, what effects will there be with the change in addition of AI? What does the market look like? Figuring out what is the competitive pricing? What are things we should look at when it comes to equipment, staying on top of the equipment if there's equipment involved, staying informed of, and we're going to talk about this, your competitors, but knowing what the competitors are doing specifically in the market when it comes to pricing, when it comes to equipment and ways of going about business. Staying informed is also a big one, whether it's, again, investing in the stock market or your business, because you want to know what's going on in your industry and how you can stand out. So if you're in the painting space, what is it that will help you maintain that advantage and help you stand out in the industry? Which brings us into number three, which they merge together there, but is maintaining a competitive advantage. You need to know what your competition is doing. You're not spying on them in a bad way, but you want to know exactly what they are doing differently, what's working, what's not working. You're in the same industry. You're potentially competing for the same customers and clients. So what is going to make you truly stand out in a painting business? Going back to a very simple business to understand, it's the simple fact of customer service and follow-up, showing up for an appointment on time and really being professional, being able to quote the customer same day, show them before and afters, give them different options when it comes to the finish of the paint. If maybe someone in your family has health issues and there's more a paint that offers antimicrobial properties, that is also something. Standing out to me is that, okay, you don't want to consider yourself a commodity, but what can you do to stand out amongst your competitors? And I think, some of the simple stuff like follow-up, showing up on time, being able to give a quote and potentially even schedule the job all in the same day, I think that gives you a major advantage. I know for myself, we've went to get a few quotes on home services, including power washing, and took three communications or messages, I should say, for that first return and reply. So that alone leaves a bad taste in your mouth. Followed by number four, focusing on quality and always going over and beyond your customer. So if you own a business, they have options. Odds are whatever product or service you're offering, there's going to be competitors out in the market. So what do you do? And again, a lot of these are bleeding together, but what do you do when it comes to quality as far as follow-up? And that follow-up, I always tell everyone, is that mistakes or issues are inevitable. It's part of business. Things will happen. It's how you go about fixing that. And when I had my last companies, we would go back and say, we know that mistakes and issues are inevitable and they're going to come up. What we will do is, in the event something were to come up, number one, we try to prevent it by doing a daily inspection. But in the event something does fall through the cracks, this is your main point of contact, and this is how we will go about fixing that issue. Fixing the issue, being proactive to make sure it doesn't happen again. And depending on the extent of what happened, whether it was a missed service, a missed area, going over and beyond it and issuing a credit for the day or for a partial credit. And going back into the investment world, focusing on quality, is that you're really getting to know the businesses that you're investing in, what service or product they're putting out, getting to experience the service or product. If you don't believe in the service or product, that may not be the right investment for you. Same as it may not be the right business for you. These are things that come up over and over again. And the over kind of arching theme behind all this too is that you need to also be able to understand your market. And I should actually say, I take that back. You should really be able to understand your business, what business you are in. A lot of franchise companies, again, they may be in the painting space, but what they really excel is they're a marketing and sales engine. That's the true business. They excel at marketing, sales. They're a lead generation engine that they can really apply to just about any home service type of business, and not investing in a business or starting a business you don't truly understand, and taking your time before launching or investing in a current business or investing in that specific stock, that publicly traded company. Really understanding the business is going to be key, knowing everything about it, experiencing it. If you're going to invest in a certain business, you want to experience a service and product, as I mentioned earlier, before diving in and investing in that business. And you don't have to be invested in anything. In the stock market, there's mutual funds, there's bonds, there's commodities, there's crypto, there's so many different options. Don't feel like you have to be able to invest in all those areas. I personally do not invest in crypto. I have nothing against crypto. I don't understand and I'm not comfortable with that type of currency. So I don't invest in it. Can you make money? Absolutely. Can you lose money? Absolutely. But the whole premise there is investing in things that you're comfortable with, have experience with. And that's not to say I don't get up to speed and maybe invest down the road. But currently, I feel like between my business, my investments in real estate and the stock market, that's comfortable for me. I'm getting growth. I'm getting monthly and quarterly income and distributions, and that's okay. So don't feel like you have to be in every aspect of the market or that you have to have 20 different businesses. Mark Cuban talks about this all the time. We had one of his companies he invested in on Shark Tank called Source Soap. You only have to be right once is something he talks about all the time. And you're going to have some failures in the mix as well. So you don't have to have 20 businesses. You can really focus in on one business and do a lot of damage with that business. If you think about it, 24 hours in a day, if you're focusing on one business versus I had met someone early on in my career, he owned 7 businesses. And I go, why 7? He's like, well, for every day of the week, he would literally dedicate himself and go to that car wash, and he owned a separate auto detailing business and a business that dyed clothing and sold dyes and 4 others. And he would actually spend that day in and off a small little office, talk to everyone, and dedicate a day a week for each business, which I thought was cool. Did they all equally make him money? They all made him money. He did say there was 1 or 2 that made a majority of his income, but I found that interesting. So there's no right or wrong here, I guess is the point I'm trying to make, is that you don't want to spread yourself thin, especially when you're launching your first business. Really get to know the business, the platforms to be on, and focus on quality. You want to give that product or service everything you have. You don't want to go in halfway and have a lot of mistakes and forget to follow up and things like that. And number 5 on Buffett's 5 rules that we summarize for today would be managing risk. Managing risk starts with your due diligence. And that goes back to long-term viewpoint and reiterating his rules, staying informed, maintaining a competitive advantage, focusing on quality. And managing risk is really going back to say, okay, what are the risks? What are the threats in the industry? Will AI affect my business and or service? Are there more competitors moving in and offering a similar type of business, specifically in the market I am in? How do I manage risk? Well, I also look at things when you're starting a business, and it's managing your cash flow. I always say when you own a business, you're always going to find ways to reinvest back into the business. So a big part of that is, okay, I had Rocky Lalvani from Profit First, and it's paying yourself first before expenses, figuring out a way to say, okay, for every dollar that comes in, 20% are going to taxes. I'm making these numbers up, 30% operating expense, maybe a 10% profit kind of distribution, and the rest goes to the owner's salary. And that way you're managing risk in that you're not overspending in certain areas by not having a budget and you're knowing your numbers so that you're figuring out ways, okay, do I have to cut costs? Managing risk also has to do with KPIs. reviewing the numbers, making sure you have enough lead flow. If you're having enough lead flow, is the quality there? Is the salesperson able to close those specific deals? And the same goes when you're investing in the stock market, managing risk, looking at, you're going to have the advantage of being able to look at the financials. Is there a lot of selling being done from the corporate office? Are they buying back company stock? Has there been continuous growth? Is there a plan? It's doing your homework and not going into anything blind. And that goes back to owning and understanding your business and industry. When you're managing risk, you're doing the due diligence upfront. Again, you're never going to be 100%. You're going to do as much research as you can on a franchise. You're going to talk to the franchisor. You're going to talk to the franchisees. You're also going to meet with the franchisor at a virtual or in-person discovery day, but you're doing your due diligence the best you can. Same thing when you're investing in a stock, in a publicly traded company. You're going in, you're looking at the numbers, you're looking at who owns the business. Is there a lot of selling? Is there a lot of buying? Has there been growth? Where does the company see itself? So there's a lot of analyst kind of research, which is helpful, but just knowing where the company is going, that information is all readily available. You can find that on Google Finance, but just seeing where that business is going to figure out, hey, it has done well, but that past performance, will that help and predict future performance? And not necessarily, right? We want to make sure that the company is still being innovative, utilizing AI, cutting costs while still growing and really increasing the bottom line, which at the end of the day, we want to be profitable, but we don't want to be so profitable that we're pulling so much out of the business that we're hurting growth by not reinvesting in technology, by not adding headcount and staff and things like that. To recap Warren's 5 rules, you have potential building wealth, including investing for the long term, staying informed, maintaining a competitive advantage, focusing on quality, and managing risk. And as I mentioned at the beginning of the show, focus on not losing money. And rule number 2 is don't forget rule number 1. So obviously, no one goes into business with the intention of losing money. But I think when you start a business, the intention is, let's make money. Let's get systems in place. The franchise will give you that competitive advantage, but let's reinvest back in the business. So we have the blueprint. We know exactly what to do and the systems in place, but we want to make sure to increase headcount should the demand be there in the market. So a lot of great stuff. I wanted to do this quick show because, just as I mentioned, I've been following Warren for over, I would say, close to 30 years now. Love what he's done. Back in the day, value investing really didn't appeal to me because it was the tech bubble. So it seemed like anything you purchased went up in price and in value until that bubble burst. Warren has always had a long view, a perspective on how he approaches his investments. And I think you can use those philosophies to find your business. Focus is big. Know your market. Don't spread yourself too thin by having to invest in every single investment out there to feel like you're diversified. You could be diversified, as Warren mentioned. His advice, and I heard this on a previous call, was investing 90% in the S&P index fund. It could be Vanguard, it could be the Spiders SPY, and then 10% short-term government notes. And that will be one way, dollar cost average. That way you're getting full access to the market. You're getting a little bit of cash flow in there as well, and some diversification. So very hard to continuously beat the market. Warren and Berkshire have done that consistently. And I just wanted to give a shout out to Warren. Warren, if you're listening, we'd love to have you on the show. Maybe I'll have him on, as who may have some more time on his hands, but really appreciate your words of wisdom. We'll put the link there. So if anyone wants to check out the video, really inspiring stuff, and be curious to get your feedback. Wanted to mix things up a little bit. The investment world, it's hard to find financial advisors that are able to come on the show. There's so many rules and regulations and topics and things like that. And we're not overly structured. We like to have open and honest conversation. Considering I come from the investment world and I'm no longer a financial advisor and not giving any type of financial advice, just things to think about as someone like Warren. And I think that his last meeting here before the new CEO takes over was definitely inspiring, and definitely learned something from that talk. Thanks again for joining, everyone. We're going to mix things up. We're going to add the shows like this going forward, just some value adds, some things to think about. I mentioned we had Jeremy Dyer. I think it was towards the end of last year. We talked about real estate syndication. We do have people that have made money in their franchise and reinvested in that area. And those are different types of investments, different types of returns, a little bit more structured, less involvement. There's some appealing aspects and not so appealing aspects depending on your situation. Franchise obviously is not passive. It's you could be full-time or part-time, but there's still involvement there. It's not a kind of buy the franchise and then walk away. It runs on its own. So really figuring out the investment that's right for you when it comes to the type of business, your involvement, the role, how many hours you can put and when those hours are, the investment. And there's quite a few other elements there, time frames and things like that. If you are interested in having a chat, I'd be more than glad to help you figure out, more important than anything else, if a franchise may be a good fit or not. Go to ggthefranchiseguide.com. You can book a call. Top right corner of the website, there's a button there. We'd love to help you out. There's no cost for our services. In 20 minutes or less, we'll figure out together if a franchise may or may not be a good fit before deciding on the next step. So hope you take me up on that offer. Hopefully you found this type of video informative and helpful. We'll share as many links as that we come up with here. And if you have any comments or a idea for a future topic, definitely let us know. Be more than glad to cover that area. I do like to mix things up, as business ownership is fun. We're not in silos here, and stock market, business ownership, franchise, real estate, all flows together when you look at it. Hit me up. Thank you for your support. Thanks for listening in today, and we'll talk to you guys soon. Bye-bye.
Thanks for tuning in. If you want to learn how to make the transition from corporate to owning your franchise, join Giuseppe on the next episode. You can also follow on all social media platforms and achieve financial and time freedom today.